All right, let's dive into the latest results from Starhill Global REIT. Now, these guys own some really iconic properties, and their new report, it gives us a fantastic look into this tug of war that's happening right now between retail and office real estate. It's pretty fascinating stuff.
So the big headline here is that their payout to investors, well, it held steady. But you and I both know the headline never tells the whole story, right? We're going to peel back the layers here and see what's really driving their performance, what challenges they're up against, and what it all means for what's coming next.
Okay, first things first, just a super quick refresher. What is a REIT? It stands for Real Estate Investment Trust, and it's basically a way for you to invest in a whole portfolio of properties. We're talking famous places like NGN City on Orchard Road without, having to buy the building yourself. They collect the rent, and then they pass a big chunk of that income right on to investors like you.
And that brings us to maybe the most important three letters for any REIT investor, DPU. That's distribution per unit. To put it simply, this is your payout. It's the cash that lands in your account for each unit you own. So whenever we're looking at how a REIT is doing, the DPU is always front and center.
So let's start with that main headline. In today's world, with all the economic uncertainty, the word stable is a very, very attractive word. And for Starhill Global REIT, that's exactly what they delivered.
The DPU for the first half of the year came in right at 1.80 Singapore cents. Now here's the kicker. That number is exactly the same as it was for this time last year. Now, on the surface, that's great. It signals a steady hand on the wheel. But it also makes you wonder, what's going on under the hood to keep things so perfectly stable? Let's find out.
So how did they hold the line? Well, every financial story has its heroes, right? And in this report, the heroes are definitely the resilience of their core assets, and frankly, some very smart moves by management. You see, the bedrock of Starhill Global's portfolio is its Singapore properties. Assets like Neon City and the retail part of Wisma Atria are proving to be just incredibly resilient. They really form this stable foundation that helps the company weather storms happening in other parts of the business. This is their anchor in a pretty choppy sea. And this quote right here, it gets to the human element of all this. The CEO, Mr. Ho Singh, points to proactive asset management. Now, that's not just some corporate buzzword. It means their team was out there, hustling, signing deals to fill empty spaces in their overseas properties. And that's a direct win that goes straight to protecting the bottom line.
Yeah, this stability really did not happen by accident. It was built on some very specific wins. The rent on a huge lease in Singapore was renewed at about 1% higher. Their properties over in Malaysia saw gains from scheduled rent increases, and hey, a stronger currency helped too. And like we just saw, they successfully filled those empty spaces abroad. These are the little engines that kept that big payout number steady.
But of course, it wasn't all smooth sailing. To get the complete picture, we have to look at the challenges that were pushing back against all that positive momentum.
And wow, this table really tells a story. This right here was the biggest drag on their performance. While the shopping mall part of their Wisma Atria property held up just fine, the office component, its revenue dropped by a huge 16.3%. That is a major headwind, mostly because of lower occupancy, and it really shines a spotlight on this clear divide between their retail and office assets.
The other big challenge came from something totally out of their control: foreign currency rates. Because this is a global REIT. They earn rent in Australian dollars, Japanese yen, you name it. And when those currencies get weaker against the Singapore dollar, that income is just worth less when they bring it all back home. And this year, that currency conversion took a real bite out of their earnings.
So, when you balance all the good stuff against all the bad stuff, what do you get? You get this number, net property income, which is a key way to measure profitability. It dipped just a little, by 0.8%. This really shows you just how hard those headwinds were blowing. All those bright spots we mentioned were needed just to keep the overall result close to flat.
Okay, so knowing all the challenges, what's the plan? How is management going to navigate all these headwinds and hopefully create some growth in the future? Well, they've laid out a pretty clear three-part strategy.
Their game plan really focuses on three main pillars. First, just managing their money wisely, keeping debt in check, keeping the finances healthy. Second, being really smart about their portfolio, buying great properties and selling off the ones that just don't fit anymore. And third, what we saw them doing earlier, actively managing their buildings to keep them full and attractive to tenants. It's a classic disciplined approach.
And check this out. Here is a fantastic real-world example of that active asset management in action.
Remember that challenge with office vacancies? Well, in their Meyer Center property over in Adelaide, they have already released about 2/3 of the space that a previous tenant left. This is tangible proof that they are executing their strategy to solve these known problems.
So, let's bring it all home. What should we, as observers and potential investors, really take away from all of this? Let's boil it down.
The story of Starhill Global REIT right now is a balancing act. It really is. On one side of the scale, you have the amazing strength and stability of their core Singapore retail properties. But on the other side, you've got these significant pressures from a weaker office market and those unpredictable foreign currency swings. The key question for the future is pretty simple. Can that resilient core continue to hold the line against those pretty powerful headwinds?
And that's our look at Starhill Global REIT's latest results. Thanks for joining us. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.